Microsoft just signed a 20-year contract to restore a nuclear plant that has been closed for over 5 years. Amazon is building their data center right next door to a nuclear plant. Meta just saved a nuclear plant that was expected to shut down, and Oracle just announced that they're going to be building 3 data centers entirely powered by nuclear reactors. And yet nobody has talked about this. I've been quietly buying 2 ETFs that sit at the center of what we just described. I'm going to tell you what they are and why I'm buying them. But first, I have to tell you why I think that this is going to be a bigger opportunity than AI itself. Hey, my name is Casey. If you enjoyed this video, leave a like and subscribe. Let's jump in. We're all familiar with AI. It's here to stay. It's the next technology that's going to revolutionize the future. But what most people don't realize is the energy consumption needs of supplying this type of technology. People think that AI just needs electricity, which is true, but what it actually needs is electricity that doesn't stop. One AI query uses roughly 3 to 30 times more energy than a simple Google search, and we're running billions of these a day. Global data center energy consumption is set to double by 2030. And in the US, data centers are expected to take up roughly 17% of the US total electricity by 2030. There's clearly a huge energy demand, but there's an underlying worry that we're not going to be able to power all of these underlying technologies with safe and reliable energy. So with the aim of powering these data centers, people have been suggesting green renewable energy like solar and wind. But there's a critical problem with using those types of energy sources for things like data centers. Solar works 23% of the time. Wind works 34% of the time. But if you look at nuclear energy, it works 92% of the time. AI data centers cannot go offline when it's cloudy. They need energy every single second of every single day. Microsoft, Google, Meta, and Amazon have access to cheap renewable energy like solar and wind. Yet the reality, they're deciding to pay more and go with nuclear energy instead. All right, so far it's just been all talk, but let me actually show you what these companies have been doing in the past couple years. Let me show you the signed contracts. Microsoft restarted 3 Mile Island, 835 megawatts, 20-year contract, online by 2028. Amazon signed for 1,920 megawatts next to a nuclear plant in Pennsylvania through 2042. Meta just saved a nuclear power plant from closing in Illinois by securing a 20-year contract for 1,100 megawatts. Google signed a fleet of small modular reactors with Kairos Power, 500 megawatts delivery between 2030 and 2035. And Oracle announced that they're going to be building 3 data centers completely powered by small modular reactors or SMRs, and no one's talking about it. In just 18 months, the top US tech companies have committed to over 10 gigawatts of nuclear energy. The entire US fleet is 95 gigawatts. That means in just 18 months, US tech companies have committed to adding over 10% to the total supply. That's not a future story, that's actually happening right now. Besides the tech companies building nuclear-powered data centers, what is the underlying idea behind the reason why I want to buy these ETFs? Why do I think that this will be outperforming AI stocks in the next decade? So here's the part that most people miss. In order to build nuclear-powered data centers, you need more nuclear power plants. In order to build more nuclear power plants, you need more uranium. And the core problem here, uranium supply is just not ready to meet that demand. The global reactor demand for uranium is roughly 170 to 185 million pounds of uranium. The mines can only produce about 160 to 165 million pounds. With the effort of bridging this gap, uranium mining companies have started to develop new mines. But the problem here is from actually finding the mine to producing uranium, it roughly takes 10 to 17 years. The demand is outpacing the supply so much that in fact the largest uranium producer just cut their production by 10% in 2026. Goldman Sachs is projecting that by 2030, uranium demand is going to shoot up over 28%. And that figure by 2040 is going to be 118%. But there's another key overlooked signal that people are missing when it comes to nuclear energy and investing in nuclear. For this, we have to look at the utility companies and what they're paying for uranium. Currently, the spot price for uranium as of May 2026 is above $84. But when it comes to long-term contracts, utility companies are paying over $93 a pound. What this means is utility companies are locking in those long-term contracts at a premium because they are expecting prices to shoot up in the near future. These companies are basically telling us that these prices will expect to go higher in the near term. This is the exact reason why I think this investment makes sense. Uranium mines take 10 to 17 years to build, and because of AI and other influencing factors, the world has just committed to tripling nuclear capacity by 2050. You can't simply triple demand and expect supply to react overnight. This is the core of why I think that this investment makes sense. So now that we've gotten past that, let me tell you about the two ETFs that I have been dollar cost averaging into since January. The first is ticker URA, or the Global X Uranium ETF. The second is NLR, or the Van Eck Uranium and Nuclear ETF. I hold both roughly 50-50 split. And let me tell you what each one gives me and why I decided to go with both instead of just picking one. So URA is going to be definitely the higher octane side. This is where we are more risk on. URA comprises of 54 companies. This includes nuclear supply chain, uranium miners, SMR developers, and fuel producers. The top holding for URA is Cameco at 23%. That's the world's largest public uranium miner. Basically, Cameco profits more when uranium prices go up. Another company that you would find in this ETF is Oklo at 6.5%. This company specializes in small modular nuclear reactors and is actually backed by the CEO of OpenAI, Sam Altman. Another key company that is found inside this ETF is Centrus Energy at 2.93%. This is the only licensed facility in the Western Hemisphere that can produce the special fuel that actually powers the next generation of SMRs. Nobody's talking about this, that the future of this industry is reliant on this one company. They basically have a monopoly in this space, and their market is expected to grow from $260 million to $6.2 billion in 2035. That is a 23x in market growth. This ETF as a whole is going to have a 0.69% expense ratio and a 4.42% dividend yield. Now that we covered the first ETF, let's talk about the second ETF, and that's NLR. NLR is going to be comprised of 29 companies, and these are going to be a bit more concentrated and they're going to be a bit more stable than URA. The main holdings in NLR is going to be Constellation Energy at 8%. They're behind the Microsoft deal at 3 Mile Island and Meta's deal in Illinois. They're guided for 20% earnings growth through 2029. Another critical holding in this ETF is BWX Technologies at 6.5%. BWX Technology makes the actual components for these commercial reactors, and they actually manufacture the reactors for the US Navy aircrafts. This company is a win regardless of what happens in the commercial markets. The expense ratio for NLR is between 0.52 and 0.56%. And that's a bit cheaper than URA, but it has a 2.53% dividend yield. So why did I put these two ETFs together? URA goes up when the price of uranium goes up. It has more potential for growth, but it also is more volatile. NLR tends to be a bit more stable and is a cushion for that downside because of its weight in utilities. When you put them together, they cover the entire nuclear industry. Now, before you drop everything and go ahead and start purchasing these ETFs, we have to talk about the risks regarding to this investment, and any honest investment video has to go here. I'm going to cover the three main risks here. The first is a nuclear accident risk. While this is an extremely low probability, any catastrophic event can substantially hurt any of these ETFs. When the event in Japan in Fukushima happened, this caused a 93% downturn in uranium stocks overnight. Modern reactor designs are significantly safer, but that risk still follows. That's why even though I am bullish on this case, I only keep it down to a small percentage of my total portfolio. Another key risk would be timeline slippage. There's a risk that these companies don't meet these deadlines deadlines, and any slippage in deadline can cause a significant impact to the stock price or valuation of these companies. Another risk that to consider is AI efficiency. If AI were to become extremely efficient and demand less energy, then the demand for this alternative energy source would go down. However, while I think that this is unlikely, you should consider this as part of your risk profile. I've been dollar cost averaging into URA and NLR for the past couple months now. They are small but meaningful parts in my portfolio, as I think that over the next coming years, this sector can really experience a huge surge in demand and following a huge growth opportunity. I think that if these contracts go through, AI demand energy surges, and then there is that disconnect between uranium demand and uranium supply, that these investments could be one of the best investments in the next coming years. But I want to make it clear, it's going to take patience, and most likely it is going to be a volatile ride for the next near future. I think that based on everything that we talked about, that this investment genuinely has a good chance of succeeding and being the next wave of growth in the AI industry. In the end, I am not a financial advisor. I'm just a 21-year-old sharing how I think and how I invest my own money. Understand the risks, do your own research when it comes to these investments, and then only once you feel comfortable, actually make the decision and invest in these stocks. In the comments below, let me know if nuclear is the future of AI energy. Thank you for sticking around to the end of the video. If you enjoyed this content, leave a like and subscribe for more videos like this. Also, feel free to check out my channel for other content where I talk about personal finance. Hey, my name is Casey, and this was another investigative look into your wallet's future. I'll catch you in the next one.